Thanks for joining us today on Market Call. I'm Morella Fernandez. Bruce Campbell is on the show with us. He's President Portfolio Manager at StoneCastle Investment Management. They'll take your questions on Canadian stocks. Here's how to reach us. Call toll free at 1-855-326-6266. You can send an email as well, marketcall at bnnbloomberg.ca. Bruce, good to see you.
Yeah, hi, Morella.
So
how are
gold,
you doing?
I'm good. Gold's still sinking today. It's been down over the past few days, now at about 5% down. What are your triggers are you seeing for this?
Yeah, I mean, it's had a pretty big move, right? I mean, if you take a look at what happened, gold's really back to where it was at the beginning of the month. And, it felt pretty good when it was going through these levels on the way up, and on the way down, it doesn't feel, quite as much fun. That's for sure. If you look at the volatility of gold, it's really picked up. So it shouldn't be too surprising at this level that we're starting to see these, kind of bigger movements. We need that volatility of gold to slow down a little bit. And then at that point in time, we'll probably shake out and determine where things are at. When we look at the longer term technicals of gold right now, this barely shows up on the longer term. That being said, I mean, the short term movements always lead to changes in the long term.
Okay, so are investors, you think, concerned a little bit about a bubble and maybe piling into taking trimming from what they've got in gold so far and considering what could come in the next couple of months or start of 2026?
Yeah, that certainly is what seems to have happened, right? In that, gold just kind of in the last little bit has gone parabolic, and then as it went parabolic, more people crowded into that, and then it just took a little bit of momentum on the downside, and then people were jumping on the fact that they wanted to lock in profits. We also, kind of interesting with the shutdown in the US, we haven't seen the data from the commodities and futures exchanges to see what's happened with some of the producers versus some of the speculators with gold. So that'll be interesting information to get when we get that updated to see really what's happened from a flow of funds perspective.
You are watching certain indicators to sort of keep an eye on whether or not we're in a bubble. What are you watching?
Yeah, not so much as whether or not we're in a bubble, but more so from a perspective of long-term market trends. And we watch a number of different technical indicators that give us a little bit of warning when the momentum or the liquidity is starting to come out of the market, and as well just give us the overall trend. And so far, we're not seeing anything there that's anything concerning. It all looks like it's intact. And I mean, we haven't really had much of a pullback. So pullback of 5% at kind of any time doesn't really show up on those indicators. So it's something that we have to always be prepared for and take advantage of when it happens.
So you'd be buying at this time?
Exactly. Given the indicators still are positive, any pullback in any specific areas, we'd be looking to add.
Okay, we will leave it there. We will line up some questions for Bruce Campbell of StoneCastle Investment Management. He's taking your questions on Canadian stocks. Here's how to reach us. We're back in a moment. Welcome back to Market Call. We're going to start with an email right now from Chris. He says, may I have Bruce's view on Hammond Power Solutions, Hammond Power out of Guelph, Ontario. They do electrification, Bruce. Is it a stock you know well?
Yeah, it's one that we've owned in the past. I've also talked about it a fair bit on Market Call when I've been on. And it's one that, if you kind of look at the stock chart, it did phenomenally well as this whole electrification of the economy started. And I mean, what they do is they produce different types of transformers that are used in power generation and power storage. And what we saw is that they continued to expand. And I mean, the stock price went from kind of being, under owned and not known to where it really, really went up almost in a parabolic state. And I think what we see now is that the stock's actually caught up to the fundamentals, or the fundamentals are caught up to the stock, I guess, is kind of more the way. And now it looks like it's about to probably accelerate. They've finished their plan now. their new plant that's going to help them produce more product. And of course, this power generation need isn't going away. And there's more companies out there all the time that are looking for power and for facilities that have power. So I would think that the tailwind behind Hammond's going to last for some time. They're going to be reporting, I believe it's later this week. So it'll be interesting to see exactly where the numbers come in for the last quarter, and then also what their guidance looks like for the next quarter and next year.
Okay, we hope that is good for Chris as we move on to our first phone call today from Dana. She's in Regina. Hi, Dana.
Hi to both of you. My question today is on Avanti Helium. I'm just wondering, where does Bruce see the stock in 2 to 5 years? And is this a viable company? Like, is it moving ahead? I see they had a placement there done a little while ago, and I'd just like to get your opinion on it. Thank you.
Okay, thank you for the question. Avanti Helium out of Vancouver explores 4 helium deposits, and they are down a little bit, but the stock's at 26 cents. So is there a good prospect for the stock?
Yeah, it's an interesting company for sure. I mean, what they did was it was a team of oil and gas professionals, and they decided that they wanted to get into the helium market. As you know, that's a byproduct of, what happens in the oil and gas industry. And it's used in a lot of different technologies nowadays. It's not just for balloons, what most people kind of think of. There's a lot of high tech that it goes into, both from a manufacturing perspective, but also from an operating perspective. And so what they did is they went out, sourced some properties, started to drill. They proved the drilling, and that they actually had a reserve. And then the next stage was that they had to go out and try to get the production facilities in place and try to find a long-term offtake agreement. The helium market was one that was very kind of topsy-turvy there for a little while, between stuff that happened with the U.S. government and then also with, politics and access to helium from, different geopolitical areas that are kind of hotbeds. And it took them a lot longer to get that offtake agreement secured. And, the entire time, the CEO just kept on plugging away. He was putting more of his own money into the company. And then just recently they announced that they actually had that offtake agreement, which is fantastic news. And now they're starting to move forward on getting the production facilities. And these are small production facilities that'll actually sit on site. And so they're working on getting those production facilities built and in place. And then at that point in time, they'll actually start to produce. And that's where, things get interesting, because if I understand correctly, is that they signed a shorter term or not a shorter term contract, but also for only part of their production to start with, just to get everything up in line and actually running. And then what they're going to do from there was, once they get things producing, they'll start to have cash flow, and then they'll go out and try to find longer term contracts at higher prices, which will really start to allow them to do more with the company. So they'll be able to go out and drill more and just continue to expand and increase their production.
What's the demand like for helium?
It's actually fairly strong, because, as I mentioned, it's used in a lot of manufacturing, and then it's also used even in something like an MRI machine. They cool that down with helium, and there's more technology all the time that's using this type of demand or this type of product. At the same time, in kind of the Russia, Ukraine areas, where there's typically been a fair bit of helium produced in the past. And of course, that's been more challenging to get. And also, even if you can get it, there's also some political challenges to that, and companies that don't want to deal with that. And then there was a big helium reserve down in the US that was controlled by the government, and it's now been in the process of being privatized. And so that always kind of messes up and destabilizes the market to a certain degree.
Okay, which is what you had mentioned earlier. All right, let's move on and get another caller. And Sam is on the line. He's in Toronto today. Hi, Sam. Sam, are you still there?
Yes.
What's your question today?
Oh, my question is about KITS, KITS, KITS Eye Care. What is the outlook for this company?
Okay, thank you for the question. Let's have a look at the line chart for KITS Eye Care. What, Bruce, do you think of KITS?
Yeah, I mean, you can't argue with the management team. I mean, this is their second time around doing this. They had a company that they had before called, I believe it was Coastal Contacts. They built that up and sold it. And now they're doing the exact same thing with even more scale and efficiency than they had done before. And so really what they're targeting is the online, eye care market. So that's both contact lenses and also glasses. They've built their own manufacturing facility in Vancouver, and it allows them to produce those glasses at a much cheaper price. And they're really targeting kind of the bricks and mortar as their competition, as well as some online. And they have talked about different levels that they wanted to hit over time. Kind of their next big goal is $500 million worth of revenue. And I suspect what'll end up happening with this is that they'll end up doing exactly what they did with their last company, which is they'll build it up and then they'll eventually sell it out to someone. That's probably a few years away yet, because they're really trying to ramp things up. The one interesting thing about this business is that the margins tend to be, fairly low. And so as they're, kind of putting more of their foot on the gas to expand, it can hurt their margins a bit. And so if you watch the stock price, it tends to go kind of up and then sideways and then up and then sideways. And the most recent quarter was a strong quarter, but I think the market was a little surprised that the margins had fallen. And so as a result, the stock prices, just kind of drifted and gone sideways here. And I think the next quarter you'll start to see, again, improvements, because it seems like they, put their foot on the gas to expand, and that grows their revenue, but their margins decrease. And then as the revenue continues to accelerate, then the margins improve, and then, it kind of levels out and it goes to the next level. So it just keeps doing that sort of stair-step fashion. And so it's one that we don't own right now, but certainly we have it on our radar, and we're kind of watching it every quarter.
All right, Bruce, we are going to take a quick break. We'll line up more phone calls and emails from Bruce Campbell, StoneCastle Investment Management. He's taking your questions on Canadian stocks. Back in a moment. Welcome back to Market Call. Let's go to the phone line. Sharavar is on the line. He's got a question today for Bruce. What's your question today?
Thank you. My question is on Blackline Safety, a Canadian company. They do gas detection type products. Profitable. So I don't know if this is like a proof of concept type company, or they really grow their business. Thank you.
Okay, thank you for the question. Safety monitoring technology, Bruce. How does this kind of business grow? Just client base?
Yeah, this is way beyond proof of concept. They operate in the field, and they keep a lot of people safe by doing it. And I mean, how do they grow is really going out there, and it's sales. And so they have a sales team, and they also have some distribution agreements with different partners where they go out and really target fleets. And so, in a lot of cases, there's workers who are working in potentially a dangerous area, and they can either be, in some cases, remote, or even if it's a plant where there's dangerous chemicals that maybe aren't necessarily detectable, they wear a monitor that would be on them, and it would be able to figure out exactly if there was any type of risks, and to also, if they're in a remote location, if there are risks, it also can notify people so that they can come and have help, either if they're not responding, or even if they don't see that threat and are unaware of it. The one thing about this company is, as it's growing, again, it's a little bit like kits, is that the numbers tend to be kind of lumpy as it's going. If you go back, it's probably around 18 months ago now, they really started to turn and have an inflection point where their profitability started to increase. And so this is a company that I suspect is a takeover target at some point in time. I wouldn't buy it because it's a takeover target, but it is at some point in time. You'll see one of their bigger competitors who seem to be lagging quite a ways behind them as far as their technology goes, will come in and pick them up.
Okay. Sounds like they do really important work, so we'll see what happens there. Let's move on to another caller. Tyler's on the line from White River in Ontario. Hi, Tyler.
Hi, guys. Hey, Bruce, I just have a question today about Rocket Doctor AI, please.
Okay, so Rocket Doctor does healthcare assessment, but more on the individual basis, Bruce?
Yeah, it's a really interesting company because they actually have it uses AI, and they have a global library of medicine. So it's different than, if you went on a ChatGPT and it's like basically going out all over trying to find the answers. This is a global library of medicine that was specifically built by Rocket Doctor. It took them 8 years to build this. And the really interesting part is that they've run this Rocket Doctor through the medical exams that are used for medical students. And I think it's 12 different environments where they go in and interview a patient and try to determine what it is. And this Rocket Doctor actually scored better than a lot of the medical students and would have passed the medical lab and the qualifications to become a doctor. And so why doctors like this is because it helps them in the triage. So when they get into the room, the patient could have already answered questions that helps them to pinpoint, okay, here's, it was from here, now it's down to here, and they can focus. And then with the insurance companies, they like it because it, of course, cuts down costs. The doctors can also specialize more so because they can take patients that are only in a specific area. So, if that's, only injuries in this area or only ailments in that area, then those are the ones that come up. And if you look at kind of who they've recently signed, they've really started to add the who's who of insurance companies. They just announced United Healthcare. They have Medicaid, Medicare, Humana, and they've proven this out already in Canada. And now they're just going into that bigger market in the US. It was one that I actually wanted to use as a top pick today, but it's just a little bit too small in the market cap perspective.
Okay, and just to clarify, because you mentioned they are picked up by someone like United Health. So when you have to go have a doctor sort of check you out for an insurance policy you want to sign up, that's when they would use this kind of AI?
Well, they would use that. They would also use it. There's actually doctors that are using this specifically. So you might reach out to your doctor. They would schedule an online appointment. They would run you through a questionnaire ahead of time that would triage you and try to figure out, okay, here's the 5 different things that it could be based on the questions that you've answered and how you've answered them. And this can be either from the doctor's end, it can be even before that from a nurse's end. And so the insurance companies are using this, who, especially like in the US where, it's the big insurance companies that provide the medical coverage. So the insurance companies are in, in network, have signed on to this to provide this service to their healthcare customers that have been part of their insurance company.
Interesting. Okay, we do have to take another break. We're going to have a look at Bruce's past picks when we come back. Welcome back. Time now to have a look at Bruce's past picks. These are from July 9th of this year, so 2025. At the time, Bruce, you chose Kraken Robotics, PNG on the TSX at $3.41, now to $6.80. So a 99% return, a 99% total return. Kraken does sort of sonar, underwater technology, that kind of thing. And I was just having a look at the line chart back to May. It was down to 230-ish and has really moved up over the past few months, sort of the end of the summer. What triggered the uptick?
If you followed this company, you know that one of their customers is Anduril, which is the big defense company down in the U.S., sort of the newer defense company down in the U.S. It's the one that's managed by Palmer Luckey, and they have been building underwater vessels, drones, and a lot of Kraken's technology goes into those. So that can be some of the sensors, that can be some of the batteries. And this is an area that's really ramping up. So China has recently announced that they're building a number of different underwater drones. And so the air was the first kind of area where there was a lot of drones, and now sea is really the next area that's expanding. And we've seen a lot of different customers getting contracts. And as a result, that's really driven the interest in Kraken on two perspectives. One is that, each time Anduril gets a new contract, we know that there's Kraken products inside of that product. And then the other thing is that this is kind of a secondary way to play or to participate in any gain that's happening with Anduril, because it's still just a private company. And so it's really kind of come to life, and there's been more interest in the US by US investors, and that's really kind of pushed this up. So it's growing both from a multiple perspective, but also from a revenue perspective.
Okay, let's move to your second past pick from July. Zedcor is ZDC on the TSX, 429 at the time, 602 today, 40% upside here, a 40% total return upside. They're out of Alberta. They do security systems, but can you expand a little bit on what they do, and is this stock that you shall hold?
Yeah, so they do remote security. So if you've ever been to different job sites on the construction side, you'll see these towers, and it's a big tower that's up, probably 20 or 30 feet. Plus, it's got cameras and surveillance on it, and this is all tied into to AI. And so it started off with this company was in the oilfield services business, and they got asked to do this as a project, and they discovered there was a huge demand for this. And so they started in Canada, started rolling these products out and rolling out their surveillance. They have a huge AI center that's manned by people, where the AI helps and assists to what's going on. And they were monitoring sites. And then what they found out is that this is actually a deterrent against theft from other places as well. So they're starting to put their systems now into parking lots of some of the big box stores. And what they found is that now when people know, hey, we're being monitored, and we can't just walk in, load a cart full of stuff and walk out, because they're going to see our face and law enforcement's going to know who they are. So they've started to see deterrent there. They've continued to expand in the US, and as they've expanded, what they've done is they've built a production facility down there, and they went from where they were producing, 10 towers a week to 15 towers a week to 20 towers a week to 25 towers a week. And so they just keep increasing their production, and then they're also expanding their geographic footprint. So they started off, if I'm right, I believe it was in Texas, and now they're starting to spread out from there towards both coasts. And the opportunity is massive here, because it's a cost that's less than, say, having full-time security on staff, and it's a little bit more efficient, and it also acts as a deterrent.
It's a stock you shall hold then?
We do, yeah. We continue to hold it here.
Got it. Okay, let's get to your next top pick quickly, which is MDA Space. MDA on the TSX. They do low orbit satellites. They lost a contract, which a month or so sent the stock down. It was $39.12 when you recommended it in July. It's down to $35.05, so a 10% drop, total return drop of 10% as well. Have you held on to the stock here?
We cut our position back. We're fairly active with our position sizing. So when they lost that EchoStar contract, when EchoStar really kind of changed direction on them, we did cut the position back in half, and now we're just holding half that position. We still like the company and think that there's amazing opportunity there. Clearly, it was a big disappointment, and it was also a surprise to the market in the fact that they had just got the EchoStar contract. Well, it would have been after I mentioned it on Market Call in July, but they got the EchoStar contract, and then it was canceled. Probably, I think it was 6 weeks later, or less than 6 weeks later, as EchoStar changed direction. And it was a $1.8 billion contract. And the market, of course, was anticipating that, that could even get bigger and bigger. It doesn't mean that, there's anything wrong with the company. EchoStar actually made a change in their direction and started selling off some of their satellite spectrum. And so this is a company that, if you've listened to the CEO of MDA speak, you kind of want to run out and buy the company with everything that you have dollar-wise, just because he's talking about the fact that, space is kind of going to be, the next frontier, as the saying is. But what's happened with space is that the pricing just continues to come down and to launch satellites. And as that happens, the market just grows that much bigger, because there's so many more people that can get into it. And MDA has been around for a long time. They have a real strong specialty, and I think that they're going to continue to do well. And we're probably any day away from where they could announce another major contract for a constellation that would be the same size as something like the EchoStar that they lost.
Yeah. And they've got a big backlog of orders. We know that. All right, Bruce, we're going to take another break. We'll answer some more of your phone calls when we come back. Stay tuned. Welcome back. Let's go right to the phone lines. Ryan is holding on the line in Saskatoon. Hi, Ryan. Ryan, are you there? Okay. I think his question was about Propel Holding, Bruce, if you want to make a comment on that.
Yeah, Propel's one that we've owned in the past. I think I've also talked about it a fair bit here on Market Call. We don't own it right now. Interestingly enough, the stock price is pulled about 40% off of its high. But it sounds like the business fundamentals in Propel's case haven't really changed. If anything, they continue to accelerate. And I think what's happening here is that there's been some other lenders, especially in the US, kind of in that what they refer to as subprime, and they've run into some difficulties. If I understand correctly, and from talking with analysts on Propel, they've actually been tightening up their credit. And who they've been providing credit to in the past, and as a result, I suspect that we'll end up seeing that this hasn't really affected Propel that much, and that it could potentially have kind of a really strong quarter. If I'm right, I believe they report next, maybe not next week, the week after, the first week of November, was I think when they report. So we'll have a much better idea then on what's happened both from a revenue and earnings perspective, but also from a credit perspective.
Okay, so we will wait for that. Let's move on to John, who's calling from Victoria today. Hi, John.
Oh, hi. Thanks very much for taking my call. I'm a first-time caller, but I've been watching since back when there used to be 2 Market Call shows every day.
That's been a while.
Yeah, it's been a while. And I'm a fan of Bruce's. And the company I'm interested in is a company out of Montreal called Quantum Emotion, symbol QNC. And they seem to have a quantum-based online security suite that they're introducing. And it seems to me that, if they can get this out there, that there's a huge opportunity for growth. So whatever you can tell me.
Okay,
Thanks.
Thank you for the question, John. Bruce, can you tell us a little bit more about what you know about quantum emotion?
Yeah, it's along the lines of what John talked about there, in that they have a technology that is in the quantum computing space, and this is an area that we've heard a lot talked about, because the challenge is that as these computers get faster and have the ability to do more quickly, there's going to be an enhanced or a requirement for enhanced security, and that's the solution that Quantum Emotion has. We don't own it right now. We owned it a little bit in the past. It's a stock that tends to make some pretty big moves, and it's made a massive move this year for sure. It's one that we continue to watch, and what we'll want to see really from them is what happens as far as revenue and earnings perspective goes with their product. Lots of certainly opportunity here. There's other players that are in the same sector as they are. And, it's one that probably by time you get that comfort level around the revenue and earnings, the stock's going to be significantly higher than where it is. But it really comes down to what your risk level is and what you can sort of tolerate from a perspective of volatility.
Yeah, we don't have the line chart, but I was just having a look here. It was about $1 and change, I guess, at the end of the summer, up to about $3 today, just shy of that at $2.98. So quick movement in a short period of time. Okay, I hope that helps out. John, let's go to Vicky, who's calling from Innisfil, Ontario. Hi, Vicky.
Hi, Bruce. We own Barrick Mining. We paid $41 a share for it quite a while ago, and we know that they have recently sold 2 gold mines. I'd like your opinion. Should we hold on or sell if gold stabilizes? Thank you.
Okay, thank you for the question. Interesting time to ask because gold has been taking a bit of a beating over the past 2 days as people sort of, I guess it was overvalued. Some people are worried about what's coming down with trade negotiations. So people are sort of getting out of gold. Maybe they're just trimming what they've got in the run up this year, Bruce. But what's your take on Barrick Mining, which is facing difficulties with some of the operations overseas?
Yeah, if you look at kind of how we manage our portfolios and what we do on a daily basis is we rank our universe from 1 to 2,600. There's about 2,600 companies that we cover in North America. And if you were to look at those ranks kind of on any given day, you can see what's moving up and down. And right now, they continue to still be dominated at the top by the gold stocks. And the reason for that is because, even though the price of gold fluctuates up and down, the trend has been up. It's up, around 50% on the year. And that's the price that the gold companies can sell for. Their costs haven't gone up nearly at that rate. If anything, they may have dropped with the fact that you've seen some of the petroleum products drop in price. And so their profitability continues to be, really strong. We don't own Barrick specifically. There's other gold companies that we own in our portfolio, but Barrick ranks right in that top group with all the rest. It's hard to give you specific advice on what to do with your holding because I don't know how it fits into your overall portfolio. But generally what we do say is, especially when a sector is doing as well as it is right now, with gold, like gold is, because of the fact that we're seeing an increase in the price, and that's increasing the earnings potential of a lot of these gold companies. That you have a piece of that. If that trend starts to change, then that's where we would look to remove those positions and go somewhere else. The short-term volatility in gold, it can be fairly severe, and the move that we saw yesterday is probably the biggest move that we've seen in about 5 years. And I think it sort of ranks in the last 10 years as far as size of move goes. So it's not something that we see all the time, but it certainly is unnerving if you're holding onto those positions because they do jump around a fair bit on that. But if you're a longer term investor, you kind of see the trend line and where things are headed.
Okay. We do have to take another break. We'll be back with Bruce Campbell of StoneCastle Investment Management. Stay tuned. Welcome back to Market Call. Bruce is with us. We're going right back to the phone lines. Mike's on the line in Toronto. Hi, Mike.
Hi, Morella. And Bruce, I'd like to get your sage advice and opinions on C21, especially now that Trump is considering rescheduling cannabis. Love to hear your answer. Bye.
Okay, thank you for the question. Bruce, C21.
Yeah, C21 is not one that we own right now. We have owned that one in the past. And if you kind of go back in history, this is a Nevada-based cannabis producer and dispensary. And don't think Las Vegas necessarily. Think some of the other areas of Nevada. And they've really, they really have a solid operator. That solid operator was their major asset that they bought, and then that operator came back in to really operate the facility. They continue to do really well, and I suspect that once you get to a place where cannabis is rescheduled or legalized, which again, that's really anyone's guess because it's been so long and there's been so many fits and starts on what that's happening. This will be taken out by one of the multi-state operators. But at this point in time, they're just like a really solid executor on their business. They operate really well. They've got a good market. It's not in the Las Vegas market, which tends to go up and down much more than what the Reno market does. And it's not one that we own right now, but certainly if you wanted to have a really solid operator that was in a single state, this is certainly one of the ones to go with.
Okay, good to know. That was C21 Investments. Let's move on to another caller, Adam, on the line in Toronto as well. Hi, Adam.
Hi there. Good day to you both. I'm a big fan of pubcos that have a niche on the market, and much like Kraken and Zedcor, Beyond Oil seems to have its own niche, but in a different market, and demand appears to be growing globally for their product. Bruce, can I get your current perspective on the ticker BOIL?
Okay, Beyond Oil out of North Vancouver. Can you tell me a little bit more about them, please, Bruce?
Yeah. So what if you look at kind of the deep fried cooking market, they have oil, and that oil gets dirty, I guess, effectively from cooking, and that oil, when it gets dirty, the food doesn't taste as good. And we've all been to that restaurant where you go, oh man, they need to change the oil on the French fries because they don't taste as good. But it's also not as good for you. There's potential that it could cause cancer based on some of the things that happen. And so the option is for them to switch out the oil, which is really expensive. Or in the case of Beyond Oil, they have an additive that can go into the oil. It removes all the impurities. They can pull that out and then reuse the oil for a much longer period of time. It was a proof of concept if you go back a couple of years ago, and now they've slowly started to roll this out. The technology itself, if I'm correct, comes from Israel, and so they've had more adoption kind of over in that market. But if you look at their press releases, they've actually signed big North American fast food chain restaurants for their divisions over in the Middle East. And what the market's anticipating is that kind of as this happens, they'll just continue to expand globally with those different players. And then also at the same time, they'll start to add more fast food restaurants and quick service restaurants to their product line. There's a huge opportunity here. And if I understand again correctly, they don't have a ton of competition that's directly related to them, that's at the same price point and does the same efficiency that they have. So it is one that is certainly one to watch. We don't own it right now, and if you looked at their revenue's been increasing, the kind of next inflection point is really going to be when they turn and go EBITDA positive.
Okay, that is for our last caller, Adam. We're going to move on to Kat, who's in North Bay, Ontario, with a question today. Hi, Kat.
Hi, thanks for taking my call. I would just like your opinion on 5N Plus, please.
Okay, 5N Plus, we'll pull that up. Can you tell me a little bit about them? I don't know about 5N Plus.
Yeah, so they manufacture some specialty products, and the biggest probably is a specific type of semiconductor and silicone that goes into solar products. And so their big customers for solar in the U.S. And what we've kind of seen is this whole revival again in solar products as the prices come down. Now it's becoming actually attractive for people to put solar on their projects, either from a commercial standpoint or even from a residential standpoint. And so First Solar's business has really picked up, and 5N as a supplier to First Solar has also started to really pick up, and their numbers just continue to ramp up. It's one that we own in our portfolio, and we think that there's still a fair bit of room for this to expand, both from a revenue and earnings perspective.
Yeah, pretty niche product, though.
It is, yes, very much so.
Okay, let's get to Gordon on the line in Victoria with his question. Gordon, how are you?
Oh, excellent, thank you. Rick Kruger was tempted out of retirement to take Suncor from an also-ran to a best practices company. He's focused on operations the last couple of years, done a great job. The knock on Suncor is their low reserve life. And I believe that Rick Kruger, before he goes back into retirement, is going to address that by way of acquisition. I can think of a couple of companies that he could put into play that would resolve the issue. What are your thoughts?
Okay. Do you believe the same about Suncor, Bruce?
Yeah, I mean, it seems to be a theme that's pretty well known across the street, or pretty, maybe not well known, but certainly well regarded as that's kind of going to be one of the ways that they look at addressing that. And I mean, you can't really argue too much with the company. It has done relatively well here, over the last few years, especially considering the oil price. It doesn't come without its volatility because it does bump up and down with the oil price. And as far as having exposure to the sector, I mean, if you want exposure, that's probably the best place to be from a more safety and security standpoint. But the one issue is, they're going to have to deal with that for sure with the reserve, and how they deal with it will be, interesting, both from a capital perspective, but also, how they pull that off and how they make that happen.
Okay, we do have to leave it there for phone calls and emails. That's all the time we have. But we have new picks from Bruce. He'll share those when we come back. Join us tomorrow on Market Call. Jamie Murray will be on the show, portfolio manager, head of research at Murray Wealth Group. He'll take your questions on global equities. And time now for new top picks from Bruce. We're going to begin with ABAX Technologies, which sounds like a very interesting, again, kind of niche firm here. Bruce, can you explain what they do?
Yeah, I mean, this is a really interesting firm for sure. What they've done is they've actually built the first futures exchange and commodity exchange in a number of years. It's taken them, 8 years to really get this done, and they've gone into an area that no other area has contracts on this. So they've gone into LNG. And then also into carbon credits, and no other futures exchange have this. It's hard to believe that LNG never had a futures contract, and they just rolled these out in the summer, and now the volume just continues to pick up and increase. They also have some sort of blockchain-ish type technology that will be used for different applications, from stock transactions to real estate transactions over the future. The area that we really get excited about, though, is this futures exchange. It's hard to believe that the existing players actually let this happen. And if you look at the investors list, it's really the who's who of finance. There are some big players that are on the cap table for this company. And so I suspect that, if those players can protect it and not let it get taken out, then it'll continue to grow and expand and then eventually get taken out. If not, then, somebody's going to come in and offer a pretty big price for this because of the technology that they've got and the head start that they've got.
Okay, and how old is the company? You mentioned they'd been working on this for some time. How old is the company?
Yeah, I believe it was originally started in 2017, and they've been working on this since, I think, 2018. So, you're kind of going on 7-8 years now where they've been working on trying to get this. And I mean, all the way along, people just sort of laughed at them and said, good try. Like, you're never going to do that. It's going to be on, one of the big futures exchanges. And they said, no, like, we're going to get this done. And Josh, who's the CEO, just, kind of just methodically just has plodded along, and then bang, they got the contracts up and trading, and they'll continue to, expand more niche products as time goes on. And the margins on these are huge, especially once the trading volume comes up. And if you look at their press releases, they've had some fantastic increases already in the volume of contracts, especially with the LNG and carbon.
And that could grow. Okay, let's get to your next pick, which is Tenaz Energy, TNZ on the TSX. What do you like about them?
Yeah, I mean, this was for a while was really kind of undiscovered and unknown. Tony Marino, who used to run Vermilion Energy, basically went to this company, got back, I guess, 3 or 4 years ago now. And his goal was basically to build, via acquisition, a large international oil and gas company. And, those always sound great at the time. And then, they made a small acquisition in Alberta, and it was kind of plodding along, and, everyone kind of doubted that, he was going to be able to pull this off. And then bang, he did this big acquisition, I guess, 1.5 years ago now, where they went into the Dutch North Sea. And the way he financed it was amazing. He basically had the deal done, and before it was closed, he was getting paid the cash flow on that deal to finance the deal. And so on closing day, he didn't have to pay very much. These were assets that were completely and totally underdeveloped and underutilized because it was a super major that was just kind of nursing these along. They didn't want to spend any money on it because it wasn't going to move the needle for them. But Tenaz came in and was able to buy this, and now they'll be able to enhance the production and continue to grow that out. As well, they just made another acquisition, same thing. They did it on a really interesting perspective as far as how they financed it. And this is something now with all this momentum, Tony's going to be able to go to bigger and larger companies that have these kind of orphaned or neglected assets and make deals like this. And so in no time, it's going to show up on the radar of a lot of investors. It's just coming up to that $1 billion market cap range here in the next little bit, and that's where it'll really hit a lot of radars.
Interesting. Okay, I want to get to your next pick, which is Happy Belly Food on the TSX, HBFG. I looked up the company. I didn't recognize the brands they represent, so maybe you could share a little bit about that.
Well, I'm surprised you haven't heard of the Rosie's Burgers, because it is the place to be. Apparently, we don't have it out west here, and I keep begging Sean, like, can you please get one going out here? And I believe they're in the works with that. So Sean Black came from MTY Foods. Well, before that, he was in the restaurant business, and then he went to MTY and really worked on their growth and expansion. And if you look at MTY previous to the last few years, when they took on some debt, it was one of the fastest growers. And Sean has basically learned lessons from MTY and applying those to Happy Belly. And so what he's doing is he's going out and buying these, small growing food companies that are, in the restaurant and sort of quick service and consumer products branding. And then what he's doing is he's just rolling those out. It's a low CapEx model for him. Quite often, a lot of those costs are paid by the franchisee. And then what they do is they get a royalty on all the top line sales. And their plan is to just continue to grow this out. This is a really hot space right now because private equity is in this space in the U.S. and gobbling up all of the big players that have grown. So
okay. We do have to leave there. I'm running out of time, so I don't want to cut you off. But
no worries.
Bruce, thank you for joining us, and thank you for joining us on Market Call. We'll see you again tomorrow.